Silver and gold are going to beat the dollar as stagflation nears. Hey everyone, thanks for watching Yankee Stacking. And yes, silver and gold are going to beat the dollar as stagflation nears. In a recent video, I discussed the inflationary recession or stagflation that could be coming as soon as this summer. I believe silver and gold are going to beat the living daylights out of the dollar. Our gross domestic product, or GDP, a measure of our overall economic health, was down 1.4% for Q1 this year. And just one more of negative growth will officially signal the start of a recession. Inflation shows no signs of stopping, people. In fact, I'm going to show you in just a minute that there are several inflationary pressures threatening to push the cost of living higher for you and me. Much, much higher. So why did the GDP drop? Good question. Check out this chart. I'll walk you through it, and I'll explain not only the realities of the last quarter, but also the threats to each of these components that make up the GDP. Personal consumption was up last quarter, 1.8%. However, that was largely fueled by debt. Debt levels jumped by nearly $42 billion. That's an annual increase of 11.3%. It set a new high. But revolving credit is what's going up so high. That's, credit cards and the like. That jumped by 20.7% to about 1.1 trillion. This has led to a dramatic loss of consumer confidence. It's at an 11-year low. And no wonder. Americans are seeing price increases everywhere, from the grocery store to the gas station. Consumer spending is going up, but that is largely due to the fact that people are paying more for the same items. They're also using their credit card more. Is that you? If it is, leave a comment below if that's what you're dealing with right now. It sure makes stacking protective silver and gold a lot harder to do when you're just trying to make ends meet, right? All right, private investment. That was steadily up too, but that may not hold as investors shift their strategy away from high-risk stocks. Speaking of stocks, they are way down, if you haven't noticed. And not just the hyper-growth stocks either. The big names are tanking too, right? Facebook, PayPal, Netflix, they're all down. The threats of inflation, supply disruptions, war, soaring debt levels that I mentioned a little bit ago are making investors nervous. Again, is that you? Are you getting nervous with your stock market portfolio? You should be. You see, for decades, investors have become accustomed to bonds acting as a safe haven when stocks start to falter. But the speed and magnitude of the bond market correction is something investors are not accustomed to, especially at the same time that stocks are going down. That is the new paradigm, people. And in my opinion, I wouldn't expect private investment to maintain its current level in the months to come. All right, so that's the plus side, the steps up. Let's take a look at the steps down for GDP. Businesses miscalculated the post-pandemic sales. They overestimated the recovery. Supply chain issues have severely hurt the economy, and businesses sold off their excess inventory. Right now, businesses are fearing a recession, and this is likely to increase. All right, oh man.
Get ready for SD Bullion's Monster Box sweepstakes that includes 500 Silver Eagles. You could be the next lucky recipient of a phone call like this.
This is Dr. Tyler Wall, CEO of SD Bullion. Well, I'm calling you to let you know that you won the SD Bullion giveaway of a Monster Box of Silver Eagles.
So click the link below for your chance to win.
The Biden administration is panicked over the upcoming midterm elections. And our senile president is rolling out that whole student loan forgiveness thing once again. It is disgusting. According to the Federal Reserve Bank of St. Louis, Student loan borrowers in the United States collectively owe over $1.7 trillion in federal and private student loan debt. How is that going to get forgiven? Well, first of all, it isn't going to get forgiven at all. It's going to get transferred to taxpayers, either directly through federal tax law or indirectly and insidiously through even more inflation. That latter approach is a tax on your future and your children's future. It's insidious because it is stealthily spread over all consumers via rising prices. You may not have gone to college. You may not have taken on massive student loan debt. And if you did take out a loan, maybe you were responsible enough to get a degree that was worth something and actually pay that debt off. Suckers. All of you. At least that's what the government views you as. If this boondoggle actually goes through, if the Democrats succeed in essentially bribing college debt holders for their vote this November, you will see inflation rage much higher. I mean, come on, guys. It's a moral hazard that will actually have the opposite effect on college costs, because transferring that debt will only inflate higher education costs even more. That's the whole idea of a moral hazard. So no wonder confidence has been lost. What a bunch of fiscally debauched bureaucrats we have running this country. But it won't stop there. If they have their way, they will decimate our economy, specifically our energy sector, with non-viable woke green initiatives. If the leftists pass that piece of garbage that is the Build Back Better plan, we will further decimate it. And if modern monetary theory becomes law, fully metastasizing in our economy, it will destroy whatever is left. Okay, sorry. Back to the chart. The trade deficit is a big reason we are seeing the first stages of stagflation right now. Q1's GDP took a major hit with anemic exports and huge imports. There was a time when our trade imbalance was like top news. It was one of the most important measures of how healthy our real economy was. No more. But our inability to produce anything has hamstrung our way of life. It is a massive indicator that our economy is not strong, it's not robust, it's not built on anything solid. As I often say in the description of my channel and in a lot of my individual videos, I stack silver and gold to hedge against our debt-fueled, fiat currency-based economy that I am convinced is nearing the end of the road. Consider stacking silver and gold to help you build and preserve your wealth. And I believe that gold and silver prices can do just that. In fact, I'm convinced they're going higher, much higher, which means, and this is hard to swallow sometimes, it means that even at current gold and silver prices, relative to historic norms, they are still cheap. Yeah, you heard me say it. Relatively speaking, based on history, based on where it should be with inflation, they're still cheap. That's why I continue to hedge against the coming stagflation, and I hope you're doing the same thing. Thanks for watching. Don't forget to click on that small little caret symbol down there if you're on a mobile device, and check out the description of this video. There's a lot of great links in there. And I hope your day is A-OK.